Ladies and gentlemen, my name is Greg Mikulowski from ForexLive.com, and this is a technical look at the dollar versus yen for January 5th, 2017. Let's get into it. I'm looking at the daily chart here of the dollar versus yen, and you'll notice here that the current price is trading around the 116 level. And if on this daily chart I have a yellow area, this yellow area seems kind of narrow, but it actually is about 13 pips. It encompasses an area from 115.96 to 116.09. And as you can see, we went a little bit below that level, well, a little bit more than a little, I guess, all the way down to around the 115.59 level, and then bounce back, and we're currently trading right in that yellow area. Now, what's the significance of this area? If I go back in time, I'm going to take you back in time to right here. And if we take a look at the swing low back in January of 2015, yes, that's 2 years ago, the market came down into this yellow area right here between the 115.96, 116.09 level. We actually went a little bit below it, but let's just ignore that for now. It's just developing a bottom right here, and then rebounded. We rebounded all the way up to 125.84. Seems like a long time ago. The next time the market fell down to this level here, it was moving pretty quickly to the downside, and lo and behold, the market found support at the 116.09 level. So we've defined a double bottom right here, in this area right here, and this area right here. Each of them led to swing levels to the upside. The next time the market came down a year ago this month, in January of 2016, where the market finds support, 115.96. Yes, we went below the 116.09 level from this point right here, but the market did find support and then quickly rebounded all the way up to the 121.71 level. So we have 1, 2, 3 different support levels. That's significant because in February the market fell below that level, and what do? We stayed below that level on this next day right here. Market high could not get anywhere near that 1596 level, 1609, and we started to move lower and lower and lower and lower and lower until we reached our low of 99.02 in June of 2016. Since that time, the market has rebounded, especially in the month of November, and we saw the market come up right to that area around the 116.09 level, fall off, and then got the courage to move above that that area right here into another resistance area that I had earmarked up here at the 118.06 to 50 level. So can you see why that level is important? Yes, and indeed the market came down to that level right here at the end of December, found support, moved higher again, and then today, again, we went a little bit below it. Here, currently trading at 116.04, so the market's having a little bit of trouble getting back below that 115.96 level, key level. I hope you see why it is a key area. And now on the top side, what's the significance of the 118.06 to 118.50? Again, I'm going to go back in time, and take a look at this area through here. And as you can see, there's a lot of swing lows that came in this yellow area right here, swing lows. We went a little bit below it here, not a little bit, a good ways below it on our way down to our lower area here, but quickly rebounding. Where do we find support? Right through here, in January 2016 and February, went a little bit above it, a little bit below as the market tried to figure out what it wanted to do. And that was when the market fell below that 115.96 level on our way to the downside until December again. And where December we came up to that yellow area here. We went up to a high of 65 on this day right here, and then a high of 60 through here. But each of those times the market moved above that 50 level. It was short term, and the market fell down, as you can see, the next day lower, and moved down to our low. So you can see the importance of this area up here, see the importance of this area down here, and that's what we're going to be trading going forward for this currency pair as it tries to figure out whether it wants to go higher or it wants to go lower. And so what's going on, or not again, but what's going on tomorrow? Tomorrow we have the U.S. employment report, and what's the significance of that? Well, we're going to see whether it's stronger or it's weaker, and a lot of times that pushes the dollar either to the upside or the downside, depending upon strength or weakness. And so if we do find support here in trading here today, and we do move a little bit away from the 96.09 level, correct a little bit higher, we're going to be in a position to have a level tomorrow through the employment report that's going to be defined by our lower lower area right here and our upper area on the top side. If the number is more strong, we could expect a move back up toward the 118.50 level, and at some point, and that would be more bullish if we get above that level. If the market is, or if the number is a little bit more bearish, then we may see the dollar versus yen crack that 115.96 with a little bit more momentum and get below the 61.8% retracement of the move down from the 2015 high. That's right here to the 2016 low. We held that level earlier in trading here today and bounced off that level. So we'll see if we can get below that level, and that would be more bearish for the dollar versus yen. So setting up for the employment report, perhaps intraday here, if we break below the 115.96 level, look for further momentum. We need to see momentum. By the way, on the hourly chart, you can see that we've tried to go below the 96 level here. We held it here and fell below it here, but failed, and moving back above the 116.03. So it's looking like it might be a little bit more supportive, or trying to find support against that level. If we can stay above that, that's more bullish. If we move below it and see more momentum, we could go down, test that 61.8% retracement. If you like this video, give it a thumbs up. If you don't like the video, give it a thumbs down. If you want to put a comment, feel free to put a comment. My name is Craig Michalowski. Good fortune with your trading. Bye-bye now.